Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited to discuss borrow from yourself, not the bank, how to take a loan from your solo 401k at Schwab. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's start out with the basics so we can understand how you can borrow from yourself, not the bank, how to take a loan from your solo 401k at Schwab. So a solo 401k is a 401k for a self-employed individual. So in order to be eligible to set up a solo 401k, you have to be self-employed with no full-time W-2 employees working for any business owned by you or a spouse, if any. So some of the top eligibility considerations are going to be whether or not you need a separate entity, like an LLC or an S Corp. The answer is no. The key is that you report earned self-employment income on your taxes. For example, on Schedule C, if your business is taxed as a sole proprietorship, or it could be a single member LLC taxed as a sole proprietorship. Income reported on a W-2, if your business is taxed as an S Corp or a C Corp, or income reported on line 14 of a K-1 that you receive in the case of a business taxed as a partnership. While there's no minimum amount of earned self-employment income that you need to be eligible to set up a plan, of course, your ability to contribute is going to be a function of your earned self-employment income because you can't save more than you earn. Your spouse or business partner can participate in the solo 401k as long as your spouse or business partner is reporting their own earned self-employment income, such as their own Schedule C or their own W-2 or their own K-1 in the case of a business taxed as a partnership. You can set up a solo 401k even if you have a day job, even if you participate in your W-2 employer sponsor plan, as long as you've got that separate earned self-employment income. Now, we are neutral as far as where the account is open for the solo 401k. And we've helped customers open up accounts at hundreds of different banks, many different brokerages. So Schwab is one of the top brokerages where we help customers open up the account. And we're very hands-on in helping customers open up the account. So if you're setting up a new solo 401k for your self-employed business and you want to have the accounts for your solo 401k at Schwab, you can have the plan with us so you can have all the features that you want, including the ability to take a solo 401k loan, but have your accounts at Schwab. So contrast that with the basic solo 401k plan that Schwab is providing. So when someone opens up a basic solo 401k plan at Schwab, what you can do with that solo 401k will depend on Schwab's offering. In other words, Schwab's plan documents. Because what a solo 401k is a retirement trust. Like any legal entity, therefore, it's the documents that create it. And what you can do with respect to that solo 401k is going to depend on the documents. So if someone opens up a basic solo 401k plan at Schwab, what they're really doing is using Schwab's solo 401k documents, and you also have your account at Schwab. But Schwab, like many brokerages, will also open up an account for third-party plans. So you could open up your solo 401k plan with us, meaning use our IRS-approved plan documents, which allow you to take a loan, but have the accounts at Schwab. So you can achieve both of your objectives of having a solo 401k plan that allows for a loan, but also have the accounts at Schwab. So that would be a scenario where someone is opening up a new solo 401k and they want to have the feature available to them to be able to take a loan. Another scenario is someone already has a solo 401k at Schwab, but it's that basic plan, right? So they use Schwab's plan documents and therefore have the accounts at Schwab. Schwab's plan documents don't allow for being able to take a 401k loan. So it's very common, it's very popular for customers to start out with the basic solo 401k plan at Schwab and then upgrade to our plan. So that process is referred to as a restatement. You could think of it as a cut and paste, where those existing Schwab plan documents are cut out and replaced with our plan documents. So the plan continues, but now it's governed by our plan documents, which allow you to take a 401k loan if you'd like to do so. So it's not as if you're shutting down your existing solo 401k at Schwab. You're not shutting down that basic solo 401k and starting up a new one. You're just restating the plan documents. Now, as part of that restatement, new accounts will need to be opened, because those accounts that you have that are associated with your basic solo 401k plan, from Schwab's perspective, don't allow for solo 401k loans because they relate to those basic solo 401k plan documents. But as we know, Schwab will open up accounts that are governed by third-party plan documents. So it'd simply be a matter of opening up new accounts at Schwab that are now governed by our plan documents, which allow you to take a loan, and then transferring over the cash and assets from your pre-existing accounts that are associated with the basic solo 401k to the new accounts that are associated with the upgraded plan provided by My Solo 401k Financial that allows you to take a loan. So once you have the plan documents that allow you to take a loan and money in those accounts or investments in those accounts, now you could take a loan, right? So you could have money or investments in that accounts because you're either making contributions, so you're contributing money from your earned self-employment income to the solo 401k, and or you're rolling money over, say from another retirement account like a former employer plan or a non-Roth IRA, or if you're someone that already has a solo 401k, the basic solo 401k at Schwab, or it could be somewhere else, a different brokerage that you upgrade to our plan, and now you have the accounts at Schwab, you could be moving over cash and assets from that pre-existing solo 401k. Then you could take a loan. So the limits, the terms of that loan would allow you to borrow up to 50%, not to exceed $50,000. And that's per participant. So say if it's a husband and wife that are both working in the same business, both participating in that solo 401k, each participant in the solo 401k could borrow 50% of their respective balance, not to exceed $50,000. Now, the loan would need to be paid back in either monthly or quarterly payments. It's up to you. Equal payments of principal and interest, with those payments spread over a 5-year term. The interest rate would be prime plus 1%. It's a fixed rate, fixed at the time that you take the loan. Or it's also acceptable to use a CD rate plus 2%. So if you choose to use a CD rate, you would need to use a CD rate for a comparable CD. So in other words, if you took a $50,000 loan, you would want to find at least one or two CD rates for a $50,000 5-year CD, take the average, provide that information to us, we add 2%, then we prepare the loan documents. So when you take a loan, it's not considered to be a taxable event. It's not subject to taxes or penalties like one would be subject to if they just took, say, an early distribution from their retirement account. It's not subject to taxes or penalties as long as it's within these loan terms, properly documented, and we handle the documentation as part of our service for no additional charge, and then paid back according to those terms. So when you go to fund a loan, you could just simply transfer money from the Schwab account for your solo 401k to your personal account. It would be acceptable to transfer it by check, because Schwab will issue a free checkbook associated with those free brokerage accounts that they set up for a third-party plan. Could also be transferred by wire, or if you have a non-retirement account at Schwab, it would also be acceptable to transfer funds from the brokerage account for your solo 401k over to your non-retirement account. And then you simply pay back the loan according to that payment schedule back to that same account that you have for the solo 401k. You're also allowed to prepay the loan. There's no prepayment penalty if you end up prepaying it earlier than the 5-year term. So that's in a nutshell how you would take a loan from a solo 401k. Now, before we go on to the next section of the slides that we wanted to share, if there are any questions or topics that you want to discuss, please chat those over. It doesn't have to be related to taking a loan from your solo 401k at Schwab. Could be anything. We appreciate the chance to discuss questions or topics. Also, if you are finding this to be helpful, if you could please like this video, that would be super helpful in getting the word out to other self-employed individuals just like you, whether you like it on YouTube or LinkedIn or X, wherever you are watching today's webinar. Also, if you share it with others that might find it to be informative or useful, there's a growing number, of course, of self-employed individuals where they may find this information to be super useful, right? Because they could use the loan to maybe fund their business, maybe help fund the purchase of their home, fix up their home. Really, any purpose is a permissible purpose, right? Kids, college tuition, et cetera, et cetera. All right, wonderful. Now let's talk about the deadline to make contributions, because that's always a hot topic this time of year. So there are different factors that impact the deadline to make contributions. One is, when was the plan established? Two is, how is your self-employed business taxed? So let's talk about two categories of plans. First category would be a plan that was set up on or before the end of 2024. So someone, for example, that either signed up with us before December 31st, 2024, or who set up a plan somewhere else and now they want to upgrade their plan to our plan to take advantage of the service and features that we offer, whether it's the ability to take a 401k loan or make mega backdoor Roth contributions, or the ability to invest in alternative investments, or just the compliance support, such as the Form 5500EZ or the Form 1099R. So if you set up the plan on or before the end of last year, and you filed an extension for your self-employed business tax return for 2024, you can make all types of contributions for 2024 by that extended deadline. So if your business, for example, is taxed as a sole proprietorship, or it could be an LLC taxed as a sole proprietorship with the income reported on Schedule C of your 1040, then you would have until October 15th of 2025 to make all types of contributions for 2024. Likewise, if your business is taxed as a partnership or an S Corp. So in the case of a partnership, you filed a 1065 and you filed an extension. Or in the case of an S Corp, and you filed an extension for your 1120S. If you also set up the plan on or before the end of last year, either with us or you're now restating, upgrading to our plan, you can make all types of contributions for 2024 by the extended tax return deadline. So whether it's employee, employer, or voluntary after tax, also known as mega backdoor Roth, you can make all types of contributions by September 15th of this year. In other words, the extended tax return deadline. And then finally, if your business is taxed as a C Corp and you set up the plan either with us or somewhere else, and now you're upgrading to our plan, and you filed an extension for your self-employed business tax return, in other words, the 1120, the case of a self-employed business tax as a C Corp, you can make all types of contributions for 2024, whether employee, employer, or voluntary after tax, by October 15th. In other words, the extended tax return deadline for that 2024 1120. Now, let's talk about the other category, which would be those who didn't set up the plan until 2025. So if you didn't set up a solo 401k, either with us or anywhere else, until 2025, you still may be able to make certain types of contributions for 2024 if you filed an extension for your 2024 business tax return deadline or your business tax return. So in the case of a sole proprietorship or an LLC taxed as a sole proprietorship, where that self-employment income is reported on Schedule C of your 1040, if you filed an extension, a timely extension for your 1040, you would have until October 15th of 2025 to set up a plan, and you could still make employer and or voluntary after-tax contributions, in other words, mega backdoor Roth contributions for 2024 by that extended deadline of October 15th. And then likewise, if you didn't set up a plan until 2025, but you filed an extension for your partnership tax return for 2024, your 1065, or your 1120S, in the case of a business that's taxed as an S Corp, if you filed an extension for your 2024 1120S, you could still set up a plan and make contributions for 2024, specifically employer or voluntary after-tax contributions for 2024 by September 15th of 2025. And then finally, if you didn't set up a plan until 2025 and your business is taxed as a C Corp, but you filed an extension, a timely extension for your self-employed business tax return, in other words, your 1120, you could still set up a plan for 2024 and make employer and or voluntary after-tax contributions by October 15th. In other words, the extended tax return deadline for that 1120. Okay, wonderful. Well, we do have a community of over 30,000 members. If you're not a member, we invite you to join. It's totally free. All are welcome. We have a vibrant community where folks are asking questions, for example, in our forums. We have a library of videos and webinars. Of course, we host these daily videos on our different channels, whether YouTube or LinkedIn or X, twice per day. If you subscribe to any of our channels, you'll get notifications so you can join and ask questions or see what we're discussing. We have our first session in the morning at 10 a.m. Pacific, 1 p.m. Eastern, and then we're back in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. And then lastly, just to highlight our AI, the industry's first AI, which you're absolutely welcome to use at solo401k.ai. It's a great way to quickly find answers to questions or find resources. But we really appreciate the opportunity to discuss these topics. Please continue to engage. And until next time, thank you so much, everyone.